Can you talk more about ZB? Seems like a safe-ish bet. Sure. So ZB is the 30-year bond. With the bonds, you've got several bond products. You've got ZB, which is the 30-year, ZN, which is the 10-year, ZF, which is the 5-year, and ZT, which is the 2 years. Most of the liquidity, most of the trading that goes on will be in ZB and ZN. They're the most liquid. If you're doing spreads, which is what you're probably going to do in these products, unless you've got a big account, a spread in the ZB is like a $10 wide spread. So it's $1,000, right? So in this case, these strikes I just did here for this put credit spread example, risking about $675 to make $235. But as far as why I mentioned that might be a good trade is because the bonds have fallen quite a bit. And a lot of that, again, I mentioned, is a lot of that was news related and just fears around the FOMC, interest rates, trade and tariff stuff. Possibly, some of what was going on with the big earnings, with the market. Now that we're past this week, I would expect this to start heading back up. Long term, everybody expects the bonds to rally from here. They've kind of been low for a while. That's the ZB chart. You look at ZN, similar, right? That's the 10 years. An example trade in the 10-year would be, well, let's see what we get for selling the 28 delta, then buying 1/2 a point below. Yeah. Risk 390 to make 110. Probably going to bump that up. And that's more like it. Risk 328 to make 171. You get the 50-cent wide strikes here in ZN, where you had the point wide strikes in ZB. That's why you end up with the spreads being able to be half the size in ZN if you want to do a smaller trade. But yeah, I like that put credit spread trade right now, just because long term, I think you have to be bullish in ZB. Now, short-term trades, you can play the downside if you want. I wouldn't play the downside right now because we just had a pullback. But like when we were moving up here, you certainly could have put on some call credit spreads or an iron condor, you wanted to be neutral. But right now, yeah, I think the smart play, you want to play it. Play it bullish. With either a put credit spread, IV rank's kind of low. Like when IV is really low, you certainly, if you wanted to do just a pure 50-50 shot, do a call debit spread at the money, which is risking 500 to make 500 in ZB. You do it in ZN, it's risking 250 to make 250. So, why don't you trade it more? The bonds are kind of boring products. The other thing is, with the market, you've got thousands of stocks to play, where with some of the bonds and currencies and the commodities, like there's only one way to play wheat, right? It's just to play the wheat futures, right? And if there's no opportunity there, you're not going to play it. And so that's the thing with the bonds is, I can either play bonds or that's it. There's no other kind of bond play. Right now, there's no IV rank in it. So there's just better opportunities, just for me. Some people like playing the bonds because they track it every day. They're interested in what's going on with yields and, all of that stuff. And if you're tracking it every day, it's something you follow every day. Naturally, you're going to want to trade it every now and then just because, hey, you feel like you know a little bit about it. They're not that interesting to me. If you want to, I should actually mention for those that want to trade this, you don't want to do the futures products. You can do TLT, which is the ETF. It's the 20+ year Treasury bond ETF. Essentially, you can think of this as ZB in ETF form. Matter of fact, the IV rank, TLT 2.2, that's where ZB is getting its IV rank. It's because the futures products don't really have an IV rank because the contracts for these things are not long enough to get an IV rank because it's a year-long tracking of the IVX. Futures contracts don't last that long. So where do these products get their IV rank, the ETFs? Well, they get it from some ETF equivalent is how TASTYTRADE does it. So they're using TLT's IV rank as the way to give you that IV rank in ZB. So you could do the same trade if you wanted to do an ETF. Like if you wanted to run the wheel, for example, right? You'd probably do that in TLT rather than ZB. ZB would be a much bigger product, for example, to sell a put. And should you get assigned the contract, it'd be a much bigger, position size as far as holding the futures contract, where TLT is $90 a share. Now, I wouldn't go sell a put in this thing because bonds, again, they're really low IV products always. I think even right now, IV rank is low, but say IV rank was 50. Still, the IVX is not going to be above 15%, 16%, right? Like there's not a lot of IV in this stuff. These things just don't move the way a stock moves. So going and selling like a 20 delta put on this thing, 44 cents credit, right? Buying power reduction, $1,400. That's a high buying power reduction on this product too. But even if the buying power reduction was $700, which is something much more reasonable, 44 cents credit is garbage credit, right? For me, somebody that loves selling puts and loves selling strangles, loves running the wheel, something like TLT, not my favorite thing to trade. You just want to be a purely directional on something though, with like some debit spreads or just straight buying a call. Not something I would typically do, but if you wanted to do that, I guess you could. I would prefer, actually, I think a better play to do the at the money call debit spread. And just some of my thoughts on that. Let's see. Trump just got a long-term commitment from China on soybeans. How do you feel about that trade as far as the futures? Yeah, I mean, soybeans, really all of the agricultural futures have been moving around like crazy this week. Obviously, soybeans, you can see the last 2 weeks. IV rank of 53, you certainly could trade it. Now, as far as what would you want to do? I don't know. As far as direction, you're going to go with the momentum and be bullish? If you said that, I'd be like, okay, makes sense. If you wanted to be a contrarian and fade the move, I'd also think that kind of makes sense. Or if you just wanted to take advantage of the high IV rank and, sell a strangle, sell an iron condor, I can understand that too. So, I mean, I have no real thoughts on what kind of trade you should take. But if you wanted to trade it, yeah, there is some opportunity here with the IV rank. Ooh, way out of the money here. Yeah, so the deltas, and that's a 20 delta right there. Just looking what a spread. So these are $5 wide spreads. Even though it's a $10 wide spread, it's really like a $500, $5 wide spread in a stock. If you're doing spreads or iron condors. So you can get kind of small here if you need to. What is the multiplier in ZS? I believe it's the same in all the ags. ZS, ZW, ZC, they're all the same multiplier, but I can't remember what it is. Don't trade these that often. Trade them on occasion, but not very often. 50. So the notional is 50. That's the multiplier. What does that mean? It means the notional value of this contract is $1,100 times 50. Now on a stock that was trading at $1,100, what's the notional value? $1,100 times 100, right? Times 50, this thing is actually not as big as you would think. If you've got a decent size account, selling, like a 16 delta put, if you wanted to be bullish, not the craziest thing in the world. Buying power reduction is really good, only $1,600, but it's futures, so you got that weird portfolio style margin with futures. Remember, this is a bigger position than you think, because it's like holding 50 shares of an $1,100 stock, basically, if you wanted to do naked options. If you're new to futures, and certainly if you got a smaller account or even a bigger account, but you're just kind of new to futures and you want to play it, do a debit spread or a credit spread or an iron condor. Now, I wouldn't do debit spreads now. IV rank's too good in there. I would go sell credit spreads and iron condors if you wanted to play it, just to check it out.